Tesla with a massive day. We're going to go over a lot in this video. I called out my Tesla calls that I entered yesterday. You guys can see here on the screen. We closed the day out up $23,800 with a 100% win rate. Now, I need to preface this video before we go into everything. We're going to talk about why I got into Tesla, the other positions that I took. We're going to go over SMCI because I know a lot of people are saying, hey, when should we be shorting this? When should we be looking to short NVIDIA? We're going to go over a lot in this video, but I want to preface by saying that every single day is not like this. I've been trading for 9 years. I have so many reps just in the tank from doing this that I don't want anyone to expect that you can get this type of return or this type of consistency just simply by following a script. I give a lot of my trades, a lot of my scripts, and all my secrets honestly away for free, all my trading strategies. But what I sell is the implementation because I know that unfortunately you can give somebody, just like a diet, something that works, tell them exactly how to do it, but unfortunately they won't follow it. And that's where I want to help you guys, is with the psychology and the discipline and the actual setups. Now, first thing that I just want to go through is show you guys that, obviously I'm not profitable every single day. My win rate this month is only 62% so far for the actual month of February, and we are up, which is very good, but I want you to realize that you do not have to be right all of the time in order to make money. You shouldn't be right all of the time because that's just not going to be sustainable. Now, let's go through the actual positions. The two big positions that we called all of this out on, the big bulk of the profit here, was Mara and Tesla. Both were called out for free on X, which you guys should definitely be following me on because it's a faster way to be updated than through these videos. But we're going to go through them and why we ended up taking those positions. Now, if you want a more detailed breakdown of the inverted head and shoulders that was setting up on Tesla, go back and watch the video that we did yesterday. The reason that I post so many videos and I don't heavily edit them and I do one every day, I try, is so that you can get an understanding of what I'm looking at in real time. None of this matters if I come back here every day and I'm like, oh, look, this is an inverted head and shoulders. You could obviously tell we had this pullback, we had this push to neckline. But as it's developing, I feel that all of the value is you guys being able to see not only how am I looking at the data, how I'm reacting to the data, but how I'm positioning my risk real time, which is why we're going to talk about how I was able to scale out and why I'm actually entirely out of Tesla calls right now, besides some March calls that I think max will probably see Tesla push up to 205 this week, maybe 210, but we're going to go over all of that in a moment. So we're going to go through the first, two waves I ended up selling Tesla and buying Tesla at. So I ended up grabbing calls yesterday. We ended up getting these 195 calls for 216. These were actually purchased, a while ago. This was not purchased yesterday. The ones that were purchased yesterday were these 315 calls. These 216 calls were purchased earlier within the week, but I ended up closing them out today for a $3,000 profit. And these 315 calls, the 190s, I ended up closing them out for a $7,000 profit. Now, I will tell you, I closed it out way too soon. I started by buying 15 of those contracts, as you guys saw in the video yesterday, around here. We were watching on the 1 hour this inverted head and shoulders that was playing out. We saw this pullback down to our support level of 182, and we were watching to see how price respected this level. We entered on this retracement and said to ourselves, listen, if we end up pulling back and breaking this support level, then the trade is done. We'll walk away and we'll be done with it. But there's a very good chance here that we will retrace back into the support, which is where we went long. And if we break this level, obviously we'll stop out. If not, we're going to run all the way back up into $200. Now, a lot of people ask me the question, hey, how do you know where to take your profits? This is something that is very tough because you have to actually have a trader's mindset. And you have to almost have a quant mindset when you're looking at risk over the long term. If you ever hear me refer to quant or quant trading, think of it as just a short way of saying a data-based trader. So I'm a quant trader who is looking at overall market structure to dictate my trading bots and my trading scripts, but my actual strategy and all the trading bots that I have in the Discord, which you guys can just go follow. It's $5 a month. The link's in the description. But all of those are based off of a very simple script. When you're trading like this, you have to understand that you're not going to have these perfect levels at all times. I get really annoyed sometimes when you see people who are trading online and they give just one target. They're like, this is the target. And it's not like that. Like, you shouldn't be saying, okay, I'm going to buy perfectly at 182 and I'm going to sell perfectly up here at 205. And if it doesn't hit 205, then fuck it. I'm just going to end up holding it until it hits 205 or I lose money. You shouldn't be doing that. What you have to realize is that smart traders, smart money, institutions, all of these people are selling into that liquidity. They're selling into that push. So for you to say that I'm not going to take any profits along this breakout is not the smartest idea, right? Let's just use from a take profit level, let's just pretend that this right shoulder here was not in play. If we were just looking at this impulse from here at 175 up to this impulse of about 195, we know that by drawing a Fibonacci retracement, that there is a very high chance that we will see this retrace back down to the 0.618 Fibonacci. This is your golden zone, and this is usually going to be where we get that continuation. In this case, pulling back down here, as we're pushing back into this resistance level, I personally started taking some profits around here. This is more important if you're trading options because risk management is everything. Let's say that we're just going to use even numbers here, $100,000 that I'm going to trade with. The max I'm going to put into a trade is $10,000 of options, for 60 days out max. I'm not saying to do this. It's like you should be trading way less, like 4%, 5% of your capital per trade. But for easy numbers, 10%, that means a $10,000 position. If you take $10,000 worth of calls and you enter a position here at 184, which is what I did, when we're pushed up into this level of 190, I am now up about 65% or $6,000. That's great. But my risk is all messed up now because normally my positions are $10,000. Now this Tesla position is $16,000. So relative to my percentage of all of my risk, I am overexposed to Tesla. Now, if this continues to run, which is what we all hope will happen, keyword hope, then yeah, I'll make way more money and it'll be awesome to post a photo and be like, look at how much more I made. But that's just not smart. Like, while we're up, we need to be taking profits off the table. So I started with 15 contracts for Tesla and I ended up closing some. You can see my first wave of profit here was at 9:40 in the morning. So as soon as we had that push up, I was up like 60 something percent. I was like, you know what, dude, I need to take my profit. So I closed some here at 9:40 in the morning. I had my original position still held here and then closed my final bit right up here around $200. So of course I missed out on some more profit, but I'm happy because that position grew so quickly that I needed to make sure that I was managing my risk as Tesla was pushing up. Now, what do I think is going to happen with Tesla at this point right now? I personally am hoping to see a pullback down to 195. I'm not entirely sure that that's going to happen as quickly as I wanted. What I was hoping to see, once again, we have to trade what's in front of us, not what we hope. But I was hoping to see this retracement today back down to about 190 so that I could go long once again here. So I have a small position relative to what I had before on Tesla, but I do still think that there's a good chance that we can see this thing continue to run. Now, let's talk about the short side here before we go into any other tickers. Looking at the short side here on Tesla, we're going to go out to the daily chart. If we take this high from back here in December 28th down to this most recent impulse low, and we were to take a Fibonacci retracement level, you're going to see that our 0.618 fib is pushed right up to $230. So our first major level to the upside again is going to be right here at 220 and 230. This will be the level that I will potentially look to go short on. Now, if we go back and draw this out here, we can take this fib from last time, you're going to notice that we started to reject here. This is where we had that potential resistance level. We ran up into 260, which is right around our 0.78 fib before selling off. So, the trend is still down. I think we're extremely, extremely oversold, and I would not be surprised if we see Tesla continue to push to $210 to $220. And from there, That's where we'll be looking for that potential rejection to maybe come back down and test that $160 level. Now let's move into the next one, which is going to be Mara, because Mara, this one I called out on X as well for a potential short. It was an absolute perfect play. If we look here, you're going to see on the daily chart that we have this big push up here from about November 8th, 2023, all the way up here to about December 26th of 2023. We have this massive impulse, and if we draw the Fibonacci from here, we're watching this retracement back down to $20, and then this push back up into 29. This is going to trigger what's called an order block. So if we go and stick this line here, this right here is going to be the order block, this candle. So in most cases, what will happen is we will actually, I can even pop this up here and it'll probably show it. Yeah, that'll actually show it. So if you don't have an indicator like that, the way that you would draw that is by finding this top and then finding the bottom of that candle. In most cases, we will reject, pull back up to test this, reject inside the block, come back down. We saw this big bounce here off of our buy zone. We played this thing all the way up to about 25 and then started shorting around this level. Now, why would I go short here? Because it's make or break, right? When I take a position, I'm not bearish against the stock specifically. I'm not bearish against Mara or think that Bitcoin has no use case. I'm literally just following the patterns that hedge funds are giving us and that, big money is giving us. That's all I'm doing. And I'm using probabilities and I'm removing my emotions from it and I'm staying stoic in my trading, just allowing things to play out. So I see a lot of people who are like, dude, you're not bullish, Bitcoin ETFs. You're not bullish on Bitcoin in general. Dude, I am. But it doesn't mean that taking a position here is not worth it, because entering where we did around $29.50, setting a stop loss on a higher high, so a close over $31.80, and then taking our profit on first gap down to $21.50, so 30% profit, and second take profit down at about $15. That is a 5-to-1 RVR and a 7-to-1 RVR, which means that we could be wrong literally 70% of the time. But as long as we play this correctly, we will break even. Those are the types of trades that I like to play, and those are the types of trades that you have to be careful with. Every single trade in your portfolio can't be this way. And this is something that's very important for those of you who want to take this extremely seriously. You should have different trading strategies that are all encompassing of a fund. It's the same way. You shouldn't be thinking as a trader. You should be thinking as a fund manager. If you were a long-term investing fund, you wouldn't just have one or two stocks or one or two things that you're looking for. You would have multiple key metrics that you're looking for based in different markets. It's the same thing with trading. This type of trade I would consider to be a tail on risk trade, meaning there's a lower probability of this happening, probably 50-50, maybe 60-40, which you saw in our journal is more than fine to be a profitable trader. But the risk versus reward is stacked, as opposed to something that's like my bread and butter type trade, like a Tesla that we just had. That is going to have a much higher win rate, but not high risk versus reward. So you kind of want to sprinkle these different types of strategies throughout your portfolio and throughout your fund. What I like to do is take 80% of my capital, put it towards my bread and butter strategies. Which, if you guys want to get access to those trades and that strategy and those trading bots, it's going to be the Discord community. It's only $5 a month. The link's in the description. But those types of trades are going to make up the consistency and the stability of the portfolio. These types of trades are the ones that are going to make me massive potential returns, from a P&L standpoint each and every single month, but also have so little downside that it's not going to wipe out and kill all of my bread and butter trades. So as far as Mara is considered, I think that we're probably going to see this pull back down into 2173. And if that doesn't happen and we break to a higher high, so be it. We'll just take the loss. I did close out of a good portion of them today. That's why I took this small $400 profit, but I'm still holding the majority of my March puts. Now let's talk about SMCI and NVIDIA. I want you guys to understand that the market is a baby. Like, the market is just a greedy freaking baby. At all points, especially if there is uncertainty, you're going to see an overreaction. We never see the market react accordingly. Now, there are times like this with SMCI where there are fundamental reasons for a company to actually break out like this. There are other times where it's just greed that is causing this to continue to push its way up. And I think that there's a big mix of both of them here. Now, the only thing I want to go over in this video is going to be, should we be shorting this? And what could be a sign of shorting it? The first thing I want you to notice is that since we broke over this resistance period here of about $300, we have not had multiple consecutive days of downtrending price action. That's the first sign. Okay, we had a couple of these pullbacks here, but we never closed multiple red candles in a row. Okay, looking at Mara, for instance, this is not a negative pullback. This, where we have this massive pullback, consolidation, and we hold. We have not seen that yet with SMCI. So in order for me to actually say, I'm going to go ahead and get puts on SMCI, or I would even think about getting puts on SMCI, in order for that to happen, we need to have multiple red candles taking out lower lows, and we have to see some serious weakness. Until then, you're just burning your money away, because you cannot say that, and this is going to hurt a lot of people, but your entry requirement cannot be that something is overvalued or that it has to come down. The reason I say that is that shit that I told myself every single time that I would go against the market 5-6 years ago and lose my ass. Every single time. There's this weird way that we view the market when we come into it as retail traders. I would say the truth, including myself, maybe it's just me, you guys can let me know, but the truth is most retail traders come from pretty poor backgrounds, right? And when you come from a poor background, you have this mindset that you need to get something at a discount, like to the point where you will buy shit, including myself, that we don't even need just because it's a discount. And so it's very odd, but when you really look at the market, you shouldn't be buying things at a massive discount from a trading perspective, I'll say. Because in most cases, that is trading at a massive discount for a fundamental reason, okay? If we're looking at a stock like UCO or something, and this thing's doing nothing but downtrending before we had this pop, what makes it have to actually reverse the trend other than it's oversold? Nothing. There are so many companies out there that will just eternally downtrend and then eventually go bankrupt. So there's this thought process that we have to get something that's not even over or undervalued, but just something that's a deal. And so when you look at something like SMCI and you see this breakout happening, most individuals will say, well, dude, there's no way I'm going long. Why would I go long when it's so overvalued? Well, the reason we're going long is because that's where the money is, right? We've had this consolidation period for so long, and now we have this massive expansion. They're obviously buying into it. Don't try to short it, right? Trade what's in front of you, not what should happen. And when I was able to actually stop trying to buy stocks extremely undervalued, right? Something that was beaten to shit, which I'm not saying you can't make money that way. Of course you can. And when I stopped trying to find the top, I started making money. I started doing it consistently. And when I started just following the trend, shit started clicking. And I realized big money's not trying to sit there and time this top on SMCI. You don't have all these hedge funds that are sitting there buying hundreds of millions of dollars worth of puts to go against SMCI. These people are actually holding their shares, right? The shares that they have accumulated, because they're not like us, right? These are people who have accumulated shares between 357 and 200. This is their expansion. This is when they're allowing this to fucking run. And they're allowing all of retail to just buy into the strength so that they can start to cover their positions from back here and let everyone get stuck. Now, when is that going to happen? I have no idea. And we don't even have to actually short this, right? A lot of people are saying dude, there's a short of a lifetime. Potentially. But like, we could just find some stocks that are actually trending in the direction that we want and just take a lot of the headache off. So we'll continue to monitor this, but I wouldn't even look at going short here until we actually show some weakness. Looking at Nvidia, it's the same exact thing. They were accumulating shares between 500 and accumulating shares between 400. You know, the Pelosi herself accumulating options and buying a ton down there. So if they were accumulating options, right, Pelosi and the gang, they're not going to be selling here. They're waiting. They're letting this continue to push. And if we look here, the same situation that happened with SMCI, we have not seen since this breakout consecutive closes, taking out lows. Nothing at all. Still long. For how long? I have no idea. But we can't prematurely decide on when there's going to be weakness. We have to actually wait for the confirmation of weakness to happen. Which I know for a lot of people, it's not fun. But still, let this thing continue to run. At some point, the top will happen. And if there's a good setup there and a good position, we'll fucking take it, right? Now let's go into the last thing. Let's talk about the S&P 500. So SPY, up over 500, still holding over 500. We saw this pullback here after that CPI data. We usually see the market overreact. Like we said earlier, the market's a giant child. And as that overreaction happened, we bounced off the 0.618 Fibonacci, and now we're moving to take up 503 and potentially testing this resistance level. So we'll see what ends up happening with the market. Guys, thank you for all the support. I have so much free content coming to you guys in this year. We have a website with free courses that are going to be coming. I plan to do an options course, a market structure course, and I really want to spend time just like this, just chilling, hanging out, and recording videos for you guys. I don't want to make this a production. I'm tired of the YouTuber thing. Like, I just kind of want to get back to how I was when I was just trading on my own. And not that I don't love trading with you guys, but making this less of like a, hey, what's up? And it's kind of like me sitting down at the end of the night, recapping my trades like I used to, going through my journal and just sharing it with you guys, right? My goal here is to be 100% authentic with you and not lead you down this road of you can make so much money tomorrow. You can do this so quickly. The goal here is to show you guys that in 9 years, right, of just sharing what I've done, that in the past 9 years, here's what I've learned. And like I always say, who you are outside of the market is who you are inside of the market. So if you guys want to join an amazing community of people who are going to keep each other fucking accountable and disciplined, but also help each other. I hate more than anything people and communities who shit on each other for asking stupid questions when in reality, we all have those questions. Go check out the link in the description. You guys can join our Discord community. And if you want to become a premium member, you will get access to all of my trades, all of our trading bots, all of our seminars and webinars, and much more, guys. Thank you so much from the bottom of my heart. And I hope you guys have a great day. Peace.